Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Robinhood markets.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. Robinhood markets has genuinely captured the market's attention recently,
Right.
particularly with the fundamental picture that emerged from their latest quarterly report. That was Q3 2025. I mean, the sheer scale of the financial acceleration they've achieved it's just remarkable.
It's forced a lot of people to completely reevaluate them, hasn't it?
Absolutely. Institutional investors are taking a very serious second look.
And when you say acceleration, we have to start with the top line, with revenue. The performance there was, well, frankly, it was astonishing.
It really was.
We're talking revenue hitting $1.27 billion in a single quarter. And for a company this size, that wasn't just healthy growth, it was a full 100% increase year over year.
Think about that. Doubling your revenue base in just 12 months.
Exactly. And that figure also beat the consensus estimates by nearly 5%. So it shows they're accelerating even faster than the market expected.
Right, and that 100% year-over-year growth is the big headline. But for me, the truly transformative part is how that scale translated down to the bottom line.
This wasn't just a volume play.
No, not at all. Profitability just soared. Earnings per share for Q3 came in at 61 cents.
And a year ago, that was what, 17 cents?
17 cents. So that's nearly a four-fold increase. It was such a significant beat that it sailed past consensus estimates by almost 20%.
And that tells you the business model is really starting to mature. It's generating serious returns now.
Yes, exactly.
And of course, Wall Street noticed. The analysts, they haven't just accepted these figures. They've actively responded. We've seen forward estimates for the full fiscal year of 2025 revised upward by, 9% in the last month alone.
That's right. It signals a huge and growing confidence in their earnings power.
The projection for the full year is now sitting around $1.95 for EPS. That would be, if they hit it, a nearly 79% jump year over year.
And that kind of growth rate is something you just don't see in the financial sector very often. It really prompts a deeper look into how they're pulling it off.
So what's the engine here?
Well, it's a potent combination of improved operating leverage and some really strict cost discipline.
Okay, let's break that down. Operating leverage.
Right. So for a digital platform like this, it's critical. Think of it this way. Once the core technology is built and paid for, those are your fixed costs. Every new user, and especially every new Robinhood Gold subscriber, cost very little extra to serve.
So essentially, they built the road, and now every additional car that drives on it.
It's almost pure profit.
Exactly.
Revenue is now growing much faster than their costs, and that's what's leading to those expanded margins.
It's an efficiency story.
It is. And on top of that, their financial strength is, it's indisputable. They have a very low leverage profile, a strong liquidity cushion, and crucially, they consistently generate positive free cash flow.
Which is the lifeblood for everything else. Innovation, acquisitions, you name it.
Precisely.
Okay, so that foundation sounds incredibly solid. But we can just shift focus for a second. We're talking about growth drivers and how they're monetizing this huge platform.
Yeah, that's a great place to go next because you can't just rely on market luck. The internal drivers suggest the growth is structural, tied to deeper engagement.
Let's drill into that engagement. The Robinhood Gold subscriber program has been a huge focus.
It has been their flagship success story.
Yeah.
We're now seeing record growth there, with the program now boasting over 3.5 million users.
And that matters because it's recurring revenue. It's sticky.
So sticky. It provides a reliable, high-margin stream of cash flow that isn't tied to daily market volume. And at the same time, they also reported record activity in options trading contracts.
High-velocity, high-fee products.
Exactly. It confirms users are engaging with the platform's most profitable features.
And speaking of expanding offerings, the growth wasn't just internal. We saw some major M&A activity.
We did. They closed two pretty big acquisitions. One was Trade PMR, which is aimed at the registered investment advisor space.
And the other one was the big one, Bitstamp.
The massive one. That was a highly strategic move to expand their platform capabilities and, crucially, secure a real global presence in crypto.
So the Bitstamp deal, that was transformative.
Absolutely. It wasn't cheap, but it was key to immediately scaling up their international market share in crypto trading. Bitstamp brings established infrastructure, a strong regulatory history.
Yeah.
It's a classic buy versus build decision. They chose to buy speed and compliance.
And what was the impact of all this activity? The user growth, the M&A on the balance sheet itself?
The impact was immediate and significant. We saw a sharp increase in total assets and, more technically, a jump in user payables.
Which, for our listeners, is basically the cash Robinhood holds on behalf of its users.
That's right. So as deposits and activity increase, so does that liability. It's a positive signal that customers are trusting the platform with more capital. And we should also note, they continued their share repurchase program, which signals management believes the stock is still undervalued.
Okay, that paints a very bullish picture. But now we have to look at the other side. Let's start with the elephant in the room, the recent high volume of executive transactions.
Yes. This is where the analysis shifts from aggressive growth to, well, risk management. We did see multiple substantial insider sales in November 2025, right after that fantastic report.
Like it.
For example, the chief legal officer filed to sell 40,000 shares. We also saw disposals from the CFO, the chief brokerage officer, directors, various trusts. It was a lot.
So how should we interpret that? Is it a sign they think the stock has peaked?
It's important to look closer. To be fair, many of these were done under pre-planned automatic rule 10b5-1 trading plans.
So they were scheduled months in advance.
Correct. For estate planning, for monetizing vested equity. So it's legally fine, but the timing and the sheer volume right after those earnings, it just creates an unfortunate narrative.
Looks like leadership is cashing out while retail investors are celebrating.
Precisely. It's a perception issue that every large fund is watching.
Okay, beyond insider activity, what about the real, tangible costs?
Specifically, M&A integration. Bitstamp is exciting, but integrating two massive global platforms sounds like a nightmare.
It's a massive operational lift, no question. Updated guidance has already reflected some anticipated integration costs. We expect costs related to combining tech stacks, workforces, compliance. It will likely put pressure on margins for a few quarters before the full revenue benefits kick in. And then there's the biggest risk of all, the one that's been hanging over them for years. The regulatory risk, yes. The ongoing chatter about potential changes to payment for order flow or PFOF regulation.
Why is this one so significant? Because PFOF is the fundamental economic engine of the zero commission model. It's a huge portion of their transaction revenue. The debate is whether retail investors are truly getting the best execution on their trades.
Right. Regulators worry the broker's duty to the client might be compromised by the incentive they get from the market maker.
Exactly. If PFOF rules were changed or, worst case, banned, it could fundamentally alter their revenue mix overnight. It remains the biggest speculative but high-impact risk out there.
So we've got these incredible fundamentals, but they're tempered by integration hurdles, management selling, and that lingering PFOF cloud. Let's shift our focus now to the road ahead. What are the key dates and catalysts to watch over the next 3 to 6 months?
Okay, the immediate future is all about validation. The market needs to see that Q3 wasn't a fluke.
And the first one coming up is an index event, right? The S&P and Nasdaq ETF rebalancing on December 19th. What's the implication there?
Well, index rebalancing can introduce large, passive institutional buying or selling. As index funds recalibrate their holdings, you could see some short-term volatility. It's just something to be aware of.
But the biggest focus, by far, will be the next earnings report.
Absolutely. The main event is the Q4 2025 earnings report, scheduled for January 30th, 2026. That is the acid test.
And investors will be watching to see if that revenue momentum continued, especially in those high-margin lines, options, crypto, gold subscriptions.
Yes. A slowdown in gold subscriber growth, for instance, would be a major red flag. And on the earnings call, management commentary will be vital. They need to address the integration progress on Bitstamp and Trade PMR.
Show that the costs haven't spiraled out of control.
Exactly. And then shortly after that, around the start of March, we get a peek at what the really big players are doing.
You mean the 13F filings?
Correct. The institutional position disclosures. They're a crucial gauge of large fund confidence, showing us who's been buying, selling, or starting new positions.
And finally, what about any speculative catalysts? Any rumors that could swing the stock?
There are a couple. First, given the Bitstamp deal, there's market chatter about further expansion of crypto offerings, maybe leveraging those new global licenses. That could open up massive new revenue streams.
Okay, and the other one?
The other one is about capital return. Given their strong free cash flow, there's speculation about an accelerated share buyback. That would signal extreme confidence from management in their long-term value.
So, to sum it all up, Robinhood is showing they can convert scale into real profitability. The growth is phenomenal. However, execution on integrating those acquisitions and managing that PFOF regulatory cloud, those are the central themes for the coming quarters.
It really is a classic high-reward scenario where execution risk is paramount. The near-term outlook is balancing that strong momentum against operational challenges and perception issues. For you, the listener, it's about weighing that proven profitability against the unknown outcome of the PFOF debate. Keep watching those customer metrics and margin stability through Q4.
A truly fascinating, high-stakes analysis. Thanks for joining us. Please remember to subscribe, like, and comment for more daily insights.